Hi there, I'm Jim Zirin. Welcome back for more conversations. Bill Cohan is with us. Bill is a financial investigative journalist, a best-selling author of 5 books, a former special correspondent for Vanity Fair, and now the founding partner and Wall Street correspondent for his latest media venture, Puck News. Wow! His latest book about the checkered history of General Electric, entitled Power Failure, The Rise and Fall of an American Icon, is a thrilling autopsy of a financial disaster. GE at its peak was a corporate behemoth, featuring a $600 billion market cap, a AAA credit rating, and among the 30 large companies making up the Dow Jones Average. Today, it has all but disappeared. Its portfolio companies, including its franchise light bulb business, sold off. Its market cap down to $87 billion. Bill Cohan can tell us how and why it happened. We're pleased to welcome Bill Cohan to the program. Well, Bill, congratulations on Power Failure. Marvelous read.
Thank you.
It's a magnum opus, 700 pages, but well worth it. How long did it take you to write a book of 700 pages?
Well, I do all my own research, all my own interviews, and guess what? All my own writing. So it took probably 2.5 years, and I think the pandemic proved to be a perfect time to write it. It was probably a bigger task than I anticipated because the company is 130 years old, but there was a lot to tell and a lot to digest, and it took a while to do it.
Now, there's a lot of history there, but the book really focuses on the CEOs of GE, Jack Welch, although you go back before Jack Welch, Jeff Immelt, and the last several years, Larry Culp. Did you interview all of them?
Larry Culp would not agree to be interviewed. I asked him many times. He didn't even respond, really, which is sort of interesting, but spent a lot of time with Jack Welch before he passed away, and right before the pandemic in March of 2020, and many hours with Jeff Immelt as well as a panoply of other GE executives and people who were very familiar with the company.
Now, the subtitle of your book is The Rise and Fall of an American Icon. Why was GE iconic?
Well, as you were saying in the introduction, I mean, it was an original member of the Dow Jones Industrial Average. It was a pioneer of incredibly important technologies. If you can imagine, I don't know if you ever watched the show, The Gilded Age, which was sort of a bit of a silly show, but there was one episode, in the first season where, Toot Manhattan is assembling down by City Hall because for a great event in the 1890s when they're going to sort of electrify a mile of downtown Manhattan. And of course, GE was responsible for that happening because the company was responsible as one of the main competitors electrifying America. And of course, Thomas Edison was one of the pioneers and developers of the equipment and the technology that created electricity and distributed it across networks. So it was for any number of reasons, a premier technology company. It was a premier financial company. And of course, when Jack Welch ran it, it went from being worth $12 billion when he took over in 1981 to, as you said, being worth around $650 billion at around the time that he relinquished the job in 2001. It was the most respected company. It was the most powerful company. And Jack Welch was, of course, the most admired and respected CEO of his time.
Well, let's go back in history. We don't have to go back to Benjamin Franklin, who perhaps discovered electricity with a kite. Say. But another myth is Thomas Edison, who invented electrification, light bulbs, other applications. And he was the first CEO of General Electric, wasn't he?
Well, actually, he created something called Edison General Electric, which was one of the two companies that got merged along with a company called Thomson Houston Company that got merged to create General Electric in 1892. But Thomas Edison was at that time a relatively small shareholder of Edison General Electric, and he was against the merger. The merger was really the brainchild of J.P. Morgan, the man, and Henry Villard, who had been a railroad baron, in effect. Henry Villard was actually the CEO of Edison General Electric, and both Henry and J.P. Morgan decided that they wanted to merge or sell Edison General Electric to the Thomson Houston Company, which had been bought out of bankruptcy by a guy named Charles Coffin up in Massachusetts, and he had his financial backers in Boston. So it was really the money men who decided that this company should be created in 1892. Thomas Edison was completely against it. He wasn't a great businessman, to be honest. He had other things he wanted to do. They did this merger around him and without his consent, basically. Put them together, and he soon sold out. He was never the CEO of GE. The first CEO of GE was,
Charles Coffin.
Charles Coffin, who was the CEO of Thomson Houston Company.
Now, their business originally was light bulbs and what else?
Well, and creating the equipment that generated the electricity, and then creating the grid that brought the electricity to all sorts of, companies that thought that they would benefit by having electric power as opposed to what they were using, which was, wood stoves and wood and candles, and, for a while there was whale oil. This was an incredible, industrial technological revolution that the electrification of the beginning of the electrification of America enabled. And of course, there are any number of snafus at the beginning. People were scared of it. So it took time for this technology to be accepted, like, guess what? Every new technology.
Now, it has been classically said that where you have a business failure, you can see the seeds of destruction almost at the outset. And then they blossom, or maybe that's not the right word, but they evolve into the unhappy picture that follows. Are there seeds of destruction that you found in your research about General Electric in the Gilded Age?
Well, I would think so. The company was founded in 1892. It was a big success right away. But in 1893, of course, there was a financial crisis, and GE had at that time around 10 million of debt, and that proved to be too much debt in 1893. Their business in the second half of the year just basically fell off a cliff, and they almost went into bankruptcy. And if it hadn't been for J.P. Morgan, the man, who was then vacationing at his home in Maine, sort of approving some financial engineering that allowed GE to buy back its debt at a discount and basically keep it out of bankruptcy. And then from there, it decided it needed to have a fortress balance sheet. So, you could say that GE's infatuation with financial engineering, began in its second year of existence to keep it out of bankruptcy. And of course, many, many years later, one of the biggest drivers of GE's profitability was GE Capital, which was the business of, that grew out of the business in the Depression of providing financing to customers to buy GE appliances in the middle of the Depression. But it became a financial behemoth, especially under Jack Welch, and almost dragged the company down the tubes during the 2008 financial crisis. So, it was sort of born in a financial crisis and kind of died, or was put on its deathbed during and after the 2008 financial crisis.
Okay, but in between there was a huge scandal, which was in the 1950s and perhaps the early 1960s. Now, who was the CEO then?
Well, again, there are people, like Reg Jones was around, and this was a huge price-fixing scandal in the electrical device industry. You know, GE was making all sorts of electrical devices, as were companies like Westinghouse and others. And they basically thought it would be pretty special to start colluding on the price of this equipment. Or, you know, if you wanted to build a power plant, you know, you had to go to one of only a very few companies, including Westinghouse and GE, and they would actually collude on the pricing of the equipment that went into that. You know, this went on and on, off and on for about 10 years. And sometimes they'd come to their senses and realize that perhaps this wasn't the smartest thing to do. And other times they'd go back into it whole hog when they weren't making as much money. And, you know, of course, eventually they got caught and there was criminal prosecution, and a number of senior GE executives.
7 of them exactly went to jail.
Went to jail.
And, okay, so Reginald Jones, talk a little bit about Reginald Jones. What kind of guy was he?
He was from rural England. He was British, middle class at best. He actually moved here with his parents, you know, to Trenton, New Jersey, and his parents got jobs working in a factory in Trenton, New Jersey. He went to Wharton and was a finance jock, essentially. Went to GE and sort of rose up through the finance function of GE, and rose up to become the CEO in the 1970s. And he was a patrician, extremely dignified and highly respected. Sort of, he was the opposite of Jack Welch in many ways, but he was somebody who Jimmy Carter spent a lot of time with. Jimmy Carter asked him on several occasions to join his cabinet, to be Treasury Secretary, and Reg Jones always declined to do that, preferring to advise Carter, quietly. It was a very important, as you would expect, the CEO of GE to be very important among American businessmen. GE was one of the founders of the Business Roundtable, and Reg Jones was a big believer in the Business Roundtable, very powerful, Washington lobbying organization for corporations.
Now, he was said to be, Jones was said to be a CEO of the old school. Some wag quipped that going to see him was like going to see the president in the Oval Office. Stern, dignified, certainly Anglophilic, if not Anglo-Saxon. Now, he handpicked Jack Welch, didn't he?
Yes.
And Jack Welch was quite a contrast. They said being with Jack Welch was like being with a fraternity brother at a tailgate party and having a beer.
Yes.
Did you have that sense about Jack Welch? You met with him a number of times.
Sure, I spent hours with Jack, and even as he was getting older, he was just incredibly gregarious, big personality, a lot of charm, great wit, and you could see how he could engender incredible loyalty among the people who worked for him. One of my favorite stories is, Dave Cody, who worked at GE for a long time, ended up running the major appliance division down in Louisville, Kentucky, which wasn't one of their best performing divisions. But he aspired to potentially be the CEO of GE. And at one point, Jack called him in and basically had dinner with him in Connecticut and said, "Look, there's no way, Dave, that you're going to be CEO of GE, so you might as well leave. In fact, I'm basically telling you must leave." And Dave tried to reason with him and tried to figure out, was there any way he could stay at GE and continue to potentially compete for the job of being Jack's successor. And Jack would have no patience for that, told him he had to leave. Well, so Dave Cody leaves, and eventually, after a few other jobs, becomes the CEO of Honeywell, which ends up having a larger market cap than GE. And so I asked Jack if he'd made a mistake with Dave Cody, and he said, yes, he had made a mistake. One of the few mistakes that he would sort of cop to. But even when I spoke to Dave Cody and interviewed him for the book, he still had this incredible reverence for Jack, even though Jack fired him. Okay,
now Jack Welch was the CEO of General Electric for 20 years.
Yes, pretty unusual.
you said he made a mistake, perhaps with Cody. Are there other mistakes you thought he made?
Well, he of course admitted to a major mistake to me even before I could sit down to interview the first time, that he had chosen the wrong successor. His selection of Jeff Immelt, he felt, was a major mistake.
He said, "I really effed up when I..."
Yes, I believe that was the language that he used. And I said, Jack, okay, I get that. This was the most important decision that you had to make as CEO, and you screwed it up. How could that have happened? And of course, he told me how he thought that had happened. But he did take responsibility for it. Obviously, he died before the company, was split up, so he did not know about that. And I think if he had been alive today, that probably would have been the thing to kill him, because the last thing he could have ever imagined was GE being split up into 3 companies and essentially his great vision for the company dissolving in front of his eyes.
Now, when Jack Welch took over, General Electric was really a conglomerate of a lot of companies that didn't have that much to do with one another in terms of their businesses. They seemed all to be off on a tangent. One of them was GE Capital, which had nothing to do with electricity. Perhaps you could describe the business of GE Capital and what Jack Welch did with that.
Well, again, it had its origins in the Depression. It was, providing financing for customers. It's called GE Credit then, providing credit for customers to buy GE appliances, right? During the Depression, times were tough, banks were closing. GE provided that financing so that its customers could buy its appliances and its products. Over time, that evolved into GE Credit becoming GE Capital and providing financing to all sorts of people for all sorts of reasons. I actually had my first job out of Columbia Business School working at GE Capital. Then I spent the year after that working for the chief credit officer in Stanford, incredible guy named Jim Fischel, and I got to see all 18 or 20 businesses that GE Capital was in. Anything to do with sort of industrial loans or financing manufactured homes or all sorts of different things. Real estate, a lot of real estate financing. That's what GE Capital was in. And it became, like the 3rd or 4th largest bank in the country, even though it did not have deposits. It did not get its money from people depositing money in the bank, like most banks, and it was unregulated. It got its money by borrowing in the short-term credit markets, in the commercial paper markets, and then lending. So it would borrow short and cheaply and lend for a long period of time and expensively. And Jack basically decided he wanted to arbitrage GE's AAA credit rating, which means they could borrow very inexpensively and then lend out very expensively and make a bazillion. And he did. And that's what he did. GE eventually was providing, GE Capital was providing 50% of GE's earnings year in and year out.
So it was a new business to be a non-bank bank.
Well, it was an old business with inside GE, but Jack really took it. Jack loved the businesses. He told me it was much easier to make money from money than making money bending metal.
Now, one criticism leveled at Jack Welch was that if the manufacturing businesses had a down quarter, he would sell assets out of GE Capital at a gain and then show a profit on a quarterly basis. And his explanation was, well, they asked me to give quarterly statements, so I give them quarterly statements.
Yes, well, Jack felt very firmly about this and being able to do this and thinking it was a legitimate practice. Again, the second thing out of his mouth, after the first thing out of his mouth was that he had messed up in the selection of Jeff Immelt. The second thing was, don't fall for, the line of my critics that I've manipulated earnings. So he believed, and, maybe because I worked at GE Capital for 2 years, I am of the view, too, that, Jack had to tell Wall Street research analysts on a quarterly basis, how much he thought GE was going to earn. GE Capital had, real estate that it owned. It had equity positions in all sorts of companies. It had loans as assets. It could sell those loans. It could sell those equity positions. It could sell that real estate, bring that cash in, and add that to the earnings of the rest of the business and make the earnings that he said he was going to make. And of course, he did that for 80 quarters in a row, which made him legendary on Wall Street. And that's why when he took over, the stock was valued at $12 billion and became worth as much as $650 billion.
Now, it was said that he had an addiction to buying, that he bought about a company a week for 20 years. And he also sold. He sold off a business about every 2 weeks. Very odd for a CEO.
Well, yeah, you know, again, GE was sort of the last thriving and surviving conglomerate. You know, you're like me, you're of a certain wisdom, shall we say, of being able to remember the conglomerate era, you know, in American capitalism, which was, you know, the 60s and 70s. And at that time, if you were a conglomerate, and GE was the ultimate conglomerate, you know, shareholders loved you. I mean, ITT and Westinghouse and GE and, you know, there were all sorts of conglomerates, and Allegheny, people loved them. They thought that there was, quote unquote, synergy between the pieces, or that a great CEO, a great manager could get some real value out of bringing these disparate businesses together. Now, of course, we don't think like that anymore, which is why basically all the conglomerates, not all of them, Danaher still exists and is pretty successful as a conglomerate. But you know, basically the whole conglomerate era is over. And GE was the last vestige of that. And Jack was probably the greatest practitioner of conglomeration that ever existed, because he was able to buy and sell all these companies, like you described, and get shareholders basically eating out of the palm of his hand, because he was able to generate the earnings that he had promised quarter after quarter. However he did it, he was able to do it, and investors loved that. And GE became the most valuable company in the world as a result.
Okay, let's be sure to get to Jeff Immelt and what his role was. Now, Welsh was there 20 years, Immelt was there 17 years, and Welsh picked him.
Yes.
And he was, what, in the healthcare division? And,
well, he had a few jobs, like...
He was kind of a salesman.
Well, he was, you know, he was right out of Central Casting.
He was overweight. Welsh didn't like that, told him to slim down.
If you don't lose weight, Jeff, you're never going to have a chance to be CEO.
Okay, so now what did he do that was so bad that brought down GE?
Well, you know, it was sort of a slow process.
It's like losing weight.
Which Jeff did, and he got the job. Look, you know, Jack thought he had handed to Jeff a royal flush hand. And I think Jeff felt he'd gotten a much lower quality hand than that. Now, you know, that can be debated, but obviously when he handed over GE to Jeff Immelt, you know, it was September 7th, 2001. Jeff Immelt's first day in the office was September 10th, 2001, and of course, you know, the world changed on September 11th, 2001, and then there were all those scandals of like at WorldCom and Adelphia, and then we had the Sarbanes-Oxley Act, which required CEOs and CFOs to sign off on their financial statements. So there was a lot more regulation. The world changed, and Jeff Immelt had to grapple with that right away. But you know, basically, Jeff Immelt ran the company, you know, very well from 2001 up until the beginnings of the 2008 financial crisis. And I think, you know, after Bear Stearns failed in March of 2008, the world changed dramatically for Jeff Immelt. And, you know, his decision-making from there on in, I think, was really open to criticism. I found that, well, as Dave Calhoun, who's now the CEO of Boeing, told me, and a longtime GE employee before he left, said that, you know, anytime Jack Welch had a big decision to make, he basically made the right decision. He obviously made a bad decision buying Kidder Peabody once upon a time, but even that, he got out of it pretty well. When Jeff Immelt had a big decision to make, he tended to make the wrong decision.
Like selling RCA for pennies on the dollar.
selling off NBC Universal to Comcast, to generate capital because he was scared of what was going on in the financial crisis, was not a great decision on Jeff Immel's part. I'm sure he thought he had to do it at the time, thought he needed to raise capital quickly, and he sold it to Comcast. Brian Roberts at Comcast picked his pocket.
Okay. Well, sadly, we've run out of time. A wonderful note to end on with somebody picking somebody's pocket. But I've got a question for you,
Yes.
Bill, and the question is, who killed General Electric?
Well, there was a dead body on the floor, and my job in this book was to help people do the autopsy and figure out what happened. And, I would say probably what killed General Electric were Jeff Immel's decisions in and around the financial crisis of 2008.
Jeff Immel's decisions. So that's marvelous. This has been marvelous. And thank you for coming by. And thank you for coming by. Tune in next week for more conversations. I'm Jim Zirin. Meanwhile, take care, be well, and all the best.